What a crazy week we just saw the last week in February. Everything going on with the virus outbreak, saw a huge drop in the markets. And I will touch on that a little bit, but mostly today I want to talk about what's been going on with the gold, especially in the last year and a half or so, and where I think the price might be headed for the remainder of 2020. I think we may be looking at a pretty big move for the rest of the year. So just quickly, I want to touch on what happened in the markets last week. So last week we saw the fastest market correction in history, and also the biggest 1 week drop in the market since 2008 with the Great Recession. So obviously the main catalyst here with the market sell-off last week was the virus outbreak, but actually this sell-off has been coming for a while, and the markets have been all-time highs over the last year, 2 years. Since 2018 there was a big drop back then, but ever since then it's been pretty much non-stop upward trends for almost everything in the market. And people have been saying for year after year that we are due for a recession. Of course, no recession has happened. Every year people are proven wrong. Maybe this year's going to be the same thing. Maybe we will see a big pullback in the market. This virus outbreak could be the catalyst that sets us into that recession. Now, the reason I think the sell-off was so big last week was partly due to the all-time highs. Everyone has been waiting to see a big market correction. So what I really want to talk about today, besides everything that's been going on in the stock market lately and with all the virus panic, I really want to talk about what's been going on with gold, especially in the last year and a half, and kind of where I think we're headed for the rest of 2020, especially if this virus outbreak worsens, or even if this market sell-off maybe leads to a recession, as some people are saying. I think we could be seeing gold go very high by the end of the year, and definitely over the next few years we could be seeing all-time highs, which I'll get into a little bit more later. So first of all, I just want to talk about what gold has been doing for the last year and a half. Gold has been on a heater, and it is up over 40% just in the last year and a half, and it has recently just reached its highest price since the spring of 2013. So to understand why the price of gold has gone up so much in the last year and a half, we really have to understand, why do people even buy gold in the first place? And I really think of three main reasons, and those are investment purposes, hedge against inflation, and really just a safe haven for your money. They all kind of have the same reason, and that is really just that gold has consistently appreciated throughout history, and it really has been a very consistent store of your wealth. And a lot of people think gold will always have value. It can never go to zero because people will always value gold. Whereas a company, in a stock, you can have it go out of business and that stock could go down to nothing. So really having your money there, it potentially could go down to nothing. Now, one of the other reasons why people buy gold, and it kind of ties into the safe haven, is especially when there's uncertainty in the markets, like we just saw last week with the huge sell-off. You've got all the panic surrounding the virus outbreak. And people are really kind of wondering, where am I supposed to put my money now? A lot of people sold their stocks, they took their profits maybe, or maybe they just said, I don't want to be in the market anymore right now because it's kind of a scary place to be. Nobody really knows what's going to happen. A lot of people are saying, oh, it's going to bounce right back. We're going to see the market recover fully. And other people are saying this could just be the beginning of a recession. So, it's impossible to say for sure what's going to happen until we know all the factors involved with this virus. And if it does get worse, we could see a very substantial pullback in the market. And one of the things right now is that we're seeing the 10-year treasury bonds at all-time lows. Now, not just recent lows or anything, they are at all-time lows. And that is historically a very safe place to put your money when you're just looking to get a steady, consistent return and you're not so sure about the market. People usually will turn to something like bonds, or precious metals, gold, silver, those kinds of things as a store of wealth, and looking to appreciate the value of their money when they're not so certain about the stock market. And that's kind of what we're seeing, is there was a huge flood into the bond market as that sell-off was going on last week, and bonds were already at extremely low rates. Now they're even lower because of the high demand for them. So gold right now, I think, is really going to be the place where a lot of people are going to be turning when they're looking for a good spot to put their money where they can get a decent return. And I think that we may be looking at a really substantial return for the remainder of the year. So I quickly just want to look back at the beginning of 2000, back kind of around 2001. Gold was sitting very low, maybe about $270 an ounce. And from about 2001 through about 2007, we saw gold prices triple. So 300% gain from 2001 to 2007, leading up to the 2008 Great Recession. And of course, during the 2008 Great Recession, we saw gold prices go crazy. And up until about 2011, where they reached their all-time highs, gold went up to about $1,900 an ounce from about $270 about 10 years earlier, which is just a crazy increase in price. So after gold reached those all-time highs in 2011, we saw them start to trail off as the market got a little more stable. Many investors started turning back to the stock market, looking at it maybe as a good place to put your money, some good buying opportunities, which of course it turned out to be some great buying opportunities, because since then the stock market has pretty much done nothing but go up, up and away. And of course now we're looking at all-time highs, at least we were before this most recent sell-off. And throughout that time, gold kind of had a rocky road. So in 2015, we saw gold prices drop to their lowest point of about $1,050 an ounce. And that was back in December of 2015. And that was still significantly higher than its highest price pre the Great Recession, which was in the $800 range. So still is doing very well as a long-term investment. And then of course now since that low point, we have seen it go pretty much up and up since then. It has been a little bit of a roller coaster ride, but has mostly just been going up, especially the last year and a half. As I said, we've seen it go up over 40%, so just been crazy in the last year and a half. So that brings us to today and what's going on with gold prices right now. Well, last week we saw kind of an interesting price change with gold. Monday, of course, was the kind of the start of that big sell-off in the stock market, and we saw gold prices skyrocket up as the market was crashing down. But then throughout the rest of the week, it was a little bit weird. Gold prices kind of tailed off. They didn't continue up as the market continued down. They kind of fell down with it. I think we're going to see a big recovery this week in gold. And there are a couple other factors in play that are coming up. One of those is the Fed is, of course, talking about cutting rates. Now, they weren't considering rate cuts at all before. It was a very low chance of the rate cuts happening in mid-March. But now because of this economic crisis, you could call it, all this sell-off, all the panic in the markets, they are actually considering doing it. And they have even talked about doing an emergency rate cut, which would take place before we even get to mid-March. Could take place any day. And if that does happen, gold prices, I believe, are going to skyrocket. So there's really two different scenarios of how I see this playing out with the price of gold for the remainder of 2020. And the first scenario is if we do see a big rebound in the stock market for the remainder of the year, or maybe just a short-term rebound. I think that the price of gold is probably just going to steadily increase as the market continues to recover and maybe just continues to go back up. Maybe the bull market continues, and that's all fine and dandy too. I think gold prices will probably just continue to go up with the market for the remainder of the year. So I don't think we'll see a huge increase in the price of gold for the remainder of the year. But the other scenario is that if this sell-off in the market due to the virus panic, and maybe there's a few other factors causing this sell-off, maybe this leads to a huge market correction or possibly even a recession. You know, some people are saying that is a possibility. Now, could just be the very beginning of that. So if that does happen, I think we could see gold prices skyrocket, because if you look back at history, gold prices love recessions. They love when the market is not doing well. So if we do see a big setback in the market, I think the price of gold could appreciate very greatly throughout the rest of the year. And I think we could be reaching probably even all-time highs by the end of the year. Now, the all-time high is about $300 an ounce more than we're looking at right now. Gold right now is approximately $1,600 an ounce. So $300 an ounce gain would be great by the end of the year. But if there really is a big recession, a big kickback in the markets, I think we could even see gold go past the all-time highs by the end of the year. And we may be even looking at prices of gold around $2,000 an ounce, which I definitely think is possible if the markets do have a big setback. Oh, just to summarize, I think gold is just gonna keep going up. Now, either way you look at it, I think if we get a market recovery or a market downturn continues, I think either way the price of gold is gonna go up by the end of the year, and I think it's gonna be a better returner this year than the market. So I really don't see how the market can recover from this and return better than gold is gonna this year. Now, maybe the price of gold is gonna go down, you never know. Nobody knows, only time can tell if that's gonna happen. But in my opinion, I really just don't see how it could, especially with all the factors at play here with the uncertainty in the market. Even if it recovers going forward, a lot of people are gonna be uncertain. They might wanna look somewhere else to put their money, and I think gold is gonna be one of those places people are looking. Now, I'm not saying to sell all your stocks and put all your money in gold. not what I'm saying at all. I just want to clarify that. I'm just saying if you don't have any gold and you're sitting on some cash right now, a lot of people are pretty cash heavy going into 2020 because there is so much uncertainty with the markets having such a good year last year and people expecting a pullback. And now that we're getting a pullback, a lot of people are selling off and maybe they've got a lot of cash on hand looking for a place to put that cash. I personally think gold is going to be a good spot to have it. I think it's going to be a good returner for the rest of the year. And I think if you don't have any, now might be a good time to get some. I'm not saying throw all your money in it, but I think a good diversification in your portfolio should have some gold and precious metals in it. I want to say a big thanks for watching the video today if you made it this far. I'm Matt with Money Matters, and I hope I was able to teach you something about gold and maybe a little insight into where I think the price of gold is going in the future. So if you did enjoy the video, drop a like down below, subscribe for some more videos in the future, and comment if you have any questions for me. I'm happy to share my experience with you. I've been investing in precious metals for a long time now, been in the business for a long time. So if you do have any questions, feel free to ask. And once again, thanks for tuning in.